Sarah, that's brilliant. So welcome everybody. As Sarah says, this is one of our webinars, and I guess, you know, what has the Chamber been doing? I'm not really sure what we've been doing for the last week. Time is just bizarre, isn't it? In lockdown, it's really, really fast, but also it feels like we've been at home for about 3 years already. So I'm desperately looking forward to what we're going to hear from Scottish Government today about us beginning to come out of lockdown and what that's going to mean. But I think we all know what it's going to mean is just a whole bunch more questions that we don't necessarily have answers for, and that's really I think central to what the Chamber has been doing since we all came home mid-March, is trying to make sense of all of the support that's out there for businesses, trying to make sure that you've got access to all of the information you need to help you with all the decisions you've got to make in your businesses. And also listening as much as possible. So, you know, I've been holding a regular, well, started off 3 times a week session with all the local authorities, with Perthshire Chamber, Business Gateway, Scottish Enterprise, Federation of Small Businesses. We've all been getting together and talking about what the local government support has been, how quickly the other business support is getting out, but also taking back all the stories of people that are finding, you know, that they fall between cracks, where there's been wrinkles and they've not been able to access support. And that's really been invaluable because the governments are listening, and the local authorities have done a brilliant job in getting the money out as quickly as they possibly can. But I suppose that's one other message that we've been saying a lot this week, is that if you haven't yet applied for any of the grant funding that you're entitled to as part of whether you're small business rates relief business or whether you're a newly self-employed business that's not yet accessed the hardship fund, please take another look at that, because the criteria is softening in a bunch of these different business support measures. So what maybe 6 weeks ago you thought you weren't entitled to, and what you might now be entitled to, it's always worth going back and having another look. So yeah, I mean, we've been working really hard since we moved into lockdown, having been absolute webinar virgins, and day 2 of being remote working, we did our first webinar. I think that's the beauty of the kind of the local community. We've got people that have been brilliant at helping us iron through all the wrinkles that there have been, because there always are. And we now do 4 webinars a week. So we start on Tuesday afternoon with coffee and a virtual cake, and that's a members networking session. And that's really, again, it's helping people share some of the challenges they've got, talk about the opportunities that they're going through in their businesses, and then really building connections. And on a Tuesday evening, we do a guide to. So a guide to communications, a guide to e-commerce. We've done, this week's been a guide to developing your business online. We did a guide to cash flow, and all of these are available on our YouTube channel to have a look at. If you missed them and you want to go and have a look, then I would encourage you to do so. On a Wednesday at lunchtime, it's a sort of take a break and take some time out. That session is always aimed at supporting people. So we've looked at mental health and well-being, we've looked at motivation, we've looked at how do you manage people remotely. And this week was all about green spaces. It's Mental Health Awareness Week and green spaces, and looking at the powers of kind of, you know, mindfulness and how that will help you. And for those of you that know me, I would say that possibly mindfulness is not my strong point. I would never put that down as one of the things I'm pretty good at practicing. But I went into yesterday's session with a bit of a bad mood and came out of it thinking that really did me some good today. So I was really, it was a nice way to look at that this week. And then our Thursday sessions are all about business support. So we have started off that series looking at things like how are international businesses coping and what support do they need. But we've looked at the business support schemes, and today's going to be no exception. This is all about how you can innovate. And it's going to be, I mean, we've been chatting to Karen this morning, you know, everything that you're doing, you should be looking at with this lens, because whether it's software systems or really exciting product innovation, we've all got something, I'm sure, that will fit into this category. So I think that's enough from me. I'm going to hand over to Karen, who is going to take you through the next steps. And then, as Sarah says, we've got time for questions at the end. So looking forward to kind of coming back on at the end and just having that discussion. But Karen, I will stay here till I know we can hear you, and then I will mute and get out of your way.
All right, so I've pressed the unmute button. You all right
Perfect.
here, guys? Right, great. I will share my screen. So just keep me posted on it popping up. All right, can you see that first slide?
I can, yes, I sure can, and it's now gone into slideshow, so yeah, fab. Thanks, Karen.
Okay, superb. So morning all, there's a few familiar faces that I see. Andrew, nice to have you on board. Andrew's actually the boss of my sister, so that's quite funny. And Tim as well from InU Science, they're one of our clients, so lovely to actually put a face to a name, Tim. I know you're on a phone call right now, so I don't know if you got that, but hi anyways. So this morning I'm going to spend about half an hour just going through a few areas of tax relief, research and development, capital allowances and remediation of contaminated land. Not going to go into too much heavy detail on them. Ultimately, it's really just to give you an overview that first of all, these legislations exist, and second of all, to find out how we can apply them to your business to see if you can qualify. Because at the end of the day, you're either going to be getting a cash lump sum, a cash injection, or you'll be getting a deduction in your corporation tax bill, throughout these. So it's worthwhile just learning a wee bit more about them. Now, you may know about research and development so far. Ultimately, if you were to read HMRC's website, it would be quite heavy. They really go into a lot of technical jargon on the science and technology behind innovations, and it kind of makes you feel like you have to be developing a rocket ship to claim. But it's not the case. Really what this legislation is all about is it's getting you to look at your market, your sector, and it's getting you to understand, how have you been innovative in your field? How have you, pushed boundaries? How have you overcome challenges? How have you, advanced what's already out there so that you can then maybe be a step ahead of your competitors or just, a pioneer in your sector? So, I mean, there's things here like pushing boundaries in your field, industry standard versus new level. Innovation can be developing something brand new to the market. It can be taking something that's already out there, but pushing its limitations, advancing it there. And something that always gets missed in research and development is innovation within process changes. So by changing a process internally, and it could be maybe software that you've adapted, or getting two pieces of machinery to talk to one another, it's never been done before. By changing a process and having a better outcome, and that outcome might be making something more ecologically friendly, doing something using less manpower than industry standard. By changing the process internally, that's how you can then claim for R&D. You've not developed anything brand new. You've not really, taken a piece of equipment and made it sing and dance, but you've changed something internally, and by doing that, you've made an advance to your field. So, things like that get missed, and it's really beneficial for, you as a company director just to look into this in a wee bit more detail. Speak to a specialist, because, any company worth their salt in this field should work on a no-win, no-fee basis. So you're not going to lose anything by having a chat about your business and seeing if you qualify. So facing new uncertainties, ultimately revenue and customs would say that you're carrying out R&D as long as you are finding what you're doing quite challenging, right? You're finding what you're doing, you've got an objective, so this is where you would like to be, but how you get there is another matter. And by getting there, it's the journey behind it. That's typically where you would face challenges. And those challenges could be things like trialing and testing a new method. It could be experimenting with something. It could be that you're developing maybe a new process and you're doing it in phases, and you have to get phase 1 right before you can get phase 2 and phase 3. And actually you have to go back 2 steps because you realise that something needed tweaked or changed. So really and truly, if you're doing R&D, you are having challenges. It's not easy. It's not like you're just going out to Google and finding an A to Z instruction list on how to do what you're doing. You must be facing risks. So that's really what they're looking for when a claim lands on their desk. So I've covered, advancing what's already out there. So again, it's all about pushing boundaries. It's all about looking at industry standard and how are you going above and beyond that. Now, if a client comes to you and you're working on something and all of your answers come from books and they come from the internet and you kind of came up with a solution within a couple of days, then that would tell us that there's not R&D, because any competent professional in your field would be able to go out and do that as well. So, you know, again, having a chat, exploring your projects is worthwhile. So here's just a few pictures of things that we typically come across. I'm not going to go into them all in detail because I don't want this to be too heavy for you, but essentially just try and get thinking, in the last couple of years, because we can go back to full tax years. In the last couple of years, what projects have you worked on where you think, do you know what, we actually kind of did go a wee bit above and beyond there, or we did kind of push the market there a bit, and by doing so, we'll talk about what you spent and if you can claim anything back from it. So this one here, misconceptions in claiming. Not going to go into too much detail on each of them, but I wanted just to breeze over a few objectives that I get, objections rather, that I get in my line of work. So first one here, my expenditure was all from funding, so I can't claim. Many of the time I speak to companies that explain they got money from Scottish Enterprise, Scottish Edge, whatever kind of funding body that they've worked with. And they've been told that because it's come from funding and not from profit or private investment, that they can't actually qualify for a claim. It's complete rubbish. Ultimately, you can still put a claim in. The only difference is you're not going to get as generous a payout as if the money came from profit or private investment. So please don't listen to anyone that tells you you can't claim. You absolutely can. It's just a difference in what you get. Here's my favourite. My accountant told me I didn't qualify. It is not, Catax work with a number of accountancy firms. We're actually a preferred partner from ICAEW, IFA and the Law Society. And the reason we are a preferred partner with these bodies is because tax relief is a very niche area. It's very specialised, it's very complex, it's complicated, and it can be quite, a mind buggery if you aren't specialised in how to do claims here. And that's the reason that accountants choose to work with Catax. It is a partnership. They're wanting the best advice for their client, so they do subcontract work out to us. The problem comes is when they aren't qualified and they don't choose to bring in a specialist. They then look at a company, and because they don't know exactly what they're looking for, because it's not obvious the R&D, they then explain to the client that they're not eligible. And there's been 101 stories I could tell you where Catax have then met the client afterwards, we've sat and had a chat, and we've uncovered R&D quite quickly. So this is then where we reach out to the accountant afterwards and explain, listen, don't be embarrassed that you missed it or that you misguided the client, but let's make sure you don't do that for other clients. Let's look at the rest of your books. Day-to-day jobs versus industry challenges. So this is really where, if you imagine two engineering companies that are developing the exact same thing, right, the exact same widget. The widget is going to look the same, sound the same, weigh the same, cost the same, do the same functions, right? Those two companies might think they don't qualify because what they're actually developing is someone else is developing it as well. So there's two of the same thing, it's not novel anymore, how can that be R&D? Well, actually, the process and how that company develops that widget, they're not calling each other up to say, oh, listen, how did you manage to get that attached to this? And how did you deal with the calculations there with the software, embedded into that piece of machinery? And, they're not sharing trade secrets. They're not sharing the process and how they develop that piece of machinery or that widget. So really, process innovation is how they claim, because it is essentially a trade secret in their eyes. They're not sharing what they're doing. They're not going out to the marketplace to pick up an easy solution. They are going to be going through trial and testing, phasing out a project. There might be a lot of materials that they waste because it's not worked out the first time and they have to do it 2 or 3 times again. And that's really where day-to-day jobs where companies are just doing what they think is a normal job versus pushing industry challenges, that's where a specialist can come in and actually help the client understand, listen, as much as you think this is just a normal day-to-day job or a normal day-to-day challenge, actually, you spent the last 6 months trying to attempt to make this better. And although that's good for you as a company and you're wanting to push yourself and be better than your competitors, do you realise that activity qualifies for a tax deduction? So again, it's just good to have an open chat. All my R&D projects failed, therefore I can't claim. So again, you don't have to develop something brand new and have it work. As long as you can showcase that you've tried to be advantageous, as long as you can showcase that you have invested money, time, skills, resources into trying to push boundaries, into trying to overcome industry challenges, then you can absolutely still put in a claim for that. It doesn't have to pull off. And buying off-the-shelf products, equipment, again, this is a tricky one because, okay, if you go and buy a piece of machinery or a piece of software or whatever off the shelf and you use it for the intended purpose you bought it for, then no, there's no R&D there, because anybody could go buy the exact same thing and use it in the exact same way. However, this is more relating to when you're maybe taking two pieces of machinery and making them talk to one another and they've never talked to each other before, or taking two pieces of software and embed or implementing them into your current system, and actually historically there's been issues with embedding that because maybe the APIs didn't match, or the bridging didn't work, or the coding hadn't been developed yet to make them work together. So there's been plenty of examples where on the face of it, there's actually a PG paper company we're working with just now. On the face of it, we wouldn't think there was obvious R&D there, but in the background, they've actually developed an internal advanced CRM system, and that software development is where their R&D sits. So it's really just about how are you taking something that is off the shelf and making it work better. That would qualify for R&D. And finally, profit versus loss. Again, I've had plenty of companies say to me, my accountant told me that because I'm not making a profit, I don't qualify for R&D, because they're led to believe that this is only reducing your corporation tax bill and nothing else. So obviously, if they're a loss-making company, they're not paying corporation tax. Again, totally wrong. If you're a loss-making company, essentially the benefit you will get from revenue and customs is a cash injection. Now, don't get me wrong, the cash injection is slightly less than what you would get as a deduction in your tax bill, but I'm sure if you're a loss-making company, you won't care about that. You'll be happy just to get the cash in the bank. So those are just a few misconceptions that I've come across. What I wanted to do was actually invite one of my clients, Stephen Hamilton from Ember Energy, onto the call. Alison, is there a way you can unmute him? And he can actually tell you about his experience working with Catax, his R&D work, and a wee bit about Ember Energy in general, in case it kind of benefits yourselves as well.
Karen, we can't unmute, but Stephen should be able to unmute himself and come on.
Okay, Stephen, there should be a wee microphone at the bottom of your screen. There we go. Brilliant. Fire on.
We're good. We're on. Yeah. Good morning.
Morning.
You want to hear my story with Catex? We're I suppose a renewable energy installer. We install biomass boilers, heat pumps, and solar panels. Basically, most of the things to do with renewable energy. We what did you say? We found out about Catex, and we've probably been doing a lot more innovative things than we maybe realized, and we've been eligible for tax relief. We didn't have a tax problem, and as Karen has just said, we got tax rebate even though we weren't eligible to pay tax. And I believe the total benefit number is somewhere in the range of 84,000, which we have 100% put back into the business. And I consider it a government subsidy for businesses, or a government grant. I don't know if that's politically correct or not, but yeah, the money's been super. It helps us to stay in business, it helps us to pay wages, and it helps us to do more things, and I guess ultimately generate more tax income, or wages tax income for the United Kingdom. So from my perspective, no downside to anyone, only positive.
Do you want to explain a wee bit about your R&D project, Stephen? That's what you went through.
Well, yeah. So we used one of our brainwaves was that on heat pumps, a heat pump makes cold liquid, and the cold liquid is normally dumped back into the ground or back into the garden as a waste product. So we use the cold in the heat pump to chill potatoes, to chill cow's milk on various sites, and that was our I suppose that was the key to R&D. It's something we would have done anyway, whether eligible for R&D or not. But we've reclaimed obviously a considerable amount of money against staff wages and against equipment and parts that were wasted. And I don't know, Karen, are we working a couple of years with yourself now, or certainly?
Yeah, you've got your third year claim already submitted, so on your way.
Even after we've claimed for for parts wastage and we've wasted actually considerably more parts than we claimed for. We're just replacing pipe at the moment that we shouldn't have installed, and but I guess that'll go into our next year's claim.
Just be looking at it.
Yeah. So no downside whatsoever. It took a little bit of time for the first money to come through. It came eventually, and we took the lower rate. We took I think it's 14% instead of the tax allowance at 20%. Is that correct, Karen?
Yeah, 14.5% for the cash injection, and then 19% for the deduction.
Yeah. So we took a reduced amount to get the money now, rather than waiting until we'd earned money and saved tax. But fantastic scheme, and
you've actually made a few referrals as well since, Stephen, to living season. So it's good that it's worked for you, that you've then passed on that knowledge.
And I'm looking forward to my commission checks.
Yeah.
I am free today. She's not giving me any money and
Perfect.
Anyone any questions? Anyone anything anything that's why you're not doing it, I suppose, is maybe my question. What's keeping you?
Well, brilliant, Stephen. Any questions that do appear, I'll have Sarah read them out just as we go. But thanks very much for your time. That's great.
No problem. So I can get on with my day now.
You can indeed.
Thank you, Karen.
Take
Fantastic.
care.
Bye.
So that was just a little example, guys, from a client. I won't repeat what he said. The slides can be sent out afterwards, but it's just nice for you to hear it from the horse's mouth that it's a good initiative. It's worthwhile, valuable to the company, and so on. So, Sarah, is there any questions about R&D so far before I move on to the next part?
Sorry, I have a problem unmuting myself there. Let me just see. There was. Oh no, just a couple of people saying thanks to Stephen for hearing from him.
No worries. Okay, perfect. So the other two incentives I'm going to go through, I'll kind of whiz through them. You'll know if they apply to you or not. But this Capital Allowances tax relief is referring to when you own commercial property. All right. Now it is really, really complex, this benefit. Ultimately, you as the client, what you get is a reduction in your corporation tax bill over the next number of years. And depending on when you purchase the building, the way your books sit, there could be actually a cash injection that you're due back from a tax bill that you've already paid. But, it takes a process to go through it. Really, really work with a specialist to do it, because you do not want HMRC knocking on your door if you get this wrong. However, ultimately, we would be looking for commercial property owners. Now, if you don't own the building, you lease it, but you've actually heavily invested in a renovation project, maybe you've spent £250,000 actually renovating the building, then you could be eligible for those costs. We would advise that you're a profit-making company, because as much as Catax work on a contingency basis, i.e. we don't charge anything unless we can get you a benefit, sometimes it does work out that actually your benefit isn't going to come until your financial year ends. But Catax have done the work 6 months before your financial year ends. So we don't want to be in a position where we invoice you, but you're not actually going to see the benefit until 3 years later, when you're then making profit. So we want you to be in a cash positive position. Purchase value, in terms of, you know, making this worth your while, it's obviously going to take some time well, not some time, but it's going to take a process to go through, and we want to make sure it's worth everyone's time. I would suggest that we're looking for, if you're a limited company, to have a purchase value of around 500,000 or more. We can include renovation costs in there, so if you did purchase it for 250 and you've renovated it for 250, then great, you know, that's worthwhile looking at. If you own through an LLP or a personal or a partnership, then I would say as long as it's purchased for over $250,000, then it's worth your while looking. The reason that there's a difference there is because normally if you own it through a private ownership or a partnership, you're on a higher tax bracket. So the benefit you get back will be higher, even though it's a smaller purchase value. And again, yeah, I need to be paying tax within the last 2 years. Now, this part in red here, I'm not going to go into too much on it, but ultimately, again, this is why you should use a specialist. Revenue and Customs can change their rules, can change the legislation at any moment. Catax do have a member for staff that sit on the HMRC committee, so we are at the forefront of knowing about changes. Now, after 2014, the government basically made a change that if you do own this property and you want to claim Capital Allowances tax relief, you must own the rights to claim. And those rights are called an S198 election. Without getting too heavy, basically, you have up to 2 years after you purchase the building to get those rights. If you don't get them within those 2 years, then unfortunately you've kind of lost the right to claim. It'd be very difficult for you to kind of win that back again. So I actually do a lot of seminars with property lawyers, property surveyors, because they really appreciate learning about this. At the end of the day, you know, knowledge is king. Passing this information on to a client could really help them make a lot of savings in the future. And the problem that we have in the market today is the lawyer says speak to your accountant, and the accountant says speak to your lawyer. And before you know it, if the client doesn't get this S198 election written within their purchase agreement, they could actually miss out on a big juicy sum. So it's good to know a wee bit about. So, you know, what is this benefit? What is this claim? Ultimately, if this claim is about taking the embedded features within the building and putting a value towards them, right? And then getting a tax percentage back on that value. That sounds quite complicated. The easiest way to think of it is take your building, tip it upside down and shake it. There will be loads of things that fall out of it, and then there'll be 101 things that stick. And it's the things that stick, such as these things. These are the things that make the building function, right? These are the things that make the building work, the embedded plant and machinery that actually make the building, you know, what it is. So these are the things that a surveyor would typically go in and put a value towards, because when you actually purchase a building, let's say you've bought it for £1 million, you don't get an itemised breakdown of what all of these are valued at. So actually, you could have purchased the building for £1 million, and there could be £500,000 worth of capital allowances costs sitting there that you can then get your tax percentage back on. So definitely worth knowing about. Here's just a little example to show changes. So this was a hotel. Don't get me wrong, the construction cost was quite hefty, almost 9 million spent on it. Now, even though there had been a capital allowances claim done on the property, we actually went back in a few years later to look at changes that HMRC had made. We had identified an additional almost 3 million worth of costs. And I can't obviously tell you what the client got back, but it was between 20 and 30% of these costs that the client was eligible. So that benefit gets split over a number of years, which means their tax bill over X amount of years would have been reduced by X amount. So just good to know, if you own a property, if you haven't claimed this, look into it, is the message. Remediation of contaminated land. This is quite a cool one. Ultimately, it will, you know, I don't know how much on if the attendees it would be valuable to, but it might just be worthwhile knowing about in case you know a contact. This is ultimately when you clean derelict or brownfield sites and you're bringing the land back into use, right? You're cleaning contaminants from the ground or the building. Now, like anything, there's a checklist. Not going to go through every single point, but really the main ones to think about is the client needs to own the land. And if they don't own it, but they're leasing it, they must be leasing it for at least 7 years. The contamination must exist at the time of purchase, so it can't be, a company made a big oil spill and themselves, and they're now trying to claim on that. It can't work that way. It has to be there when they purchase it. It's good to note here, removal of asbestos. This is one that tends to get missed quite a lot when looking at actual buildings. So you don't have to be removing asbestos from the ground. It can be in your building, and the cost that you pay to do that, you can get your tax back on it. There's other things here, you can read through them, and plenty more, case by case basis. There's always extra works that we find that we can add into a claim. And it is important to know, again, whether it's applicable to yourselves listening or not. A lot of companies will have a survey done at the beginning to assess the land, and on that survey they'll make a decision on, right, okay, we'll go ahead and we'll clean it now, or no, it's not bad enough, we don't need to clean it. If they do not go ahead and clean it, you can't just claim on the survey costs. It has to be hand in hand. You get the survey, you do the works, and combined, you'll get your tax back on your spend. So, like I said, it's just an extra one to learn about. Here's a quick example. It was an old fire station. The client spent shy of £250,000 doing additional renovation works to the building. Basically, that client was about to write that money off. We approached them, talked them through this legislation, and we managed to get them £53,000 back. So again, it's really just handy to know if you are connected to that field, if you know housing developers, land developers, commercial property surveyors, construction companies. It's a good one just to have in your pocket to pass on. And speaking of passing on, Catax, like I mentioned, we do have preferred partners, and we have a lot of commercial partners that we work with. I'm very fortunate where this line of work is always welcomed information. There's never a company I speak to that doesn't want to listen to what I've got to say, because if it is of benefit to them, or if it's of benefit to their clients, then, like I was saying, knowledge is king. So you're lucky where if you are wanting to, add value to your customers, pass on the knowledge, pass on the information. If you do want to improve your bottom line and, have an introduction fee, then this could be a really simple way to do it. My best advice would be, if what you've learned or listened to today could benefit any of your friends, family, co-workers, subcontractors, third parties, then definitely, get in touch. I can send you on some ammo to pass on to them. Stephen's actually a client for R&D, but he has introduced a recent Capital Allowances claim to me, and it's quite a juicy one. So he'll be benefiting both from a client and an introducer's point of view. And what do you get for it? So Catax, like I said, we work in a sort of contingency basis. So whatever we win from a client at the end, you as the introducer would take 20% of whatever we win. So if you introduced a client to us, Catax made 10 grand, from it as our fee, you would take 2 grand of that. And this is just a sort of short and sweet example of a carpet manufacturer who is an introducer for Catax. Now, this isn't someone that we would have naturally went to and said, listen, this could be a quite a fruitful avenue for you. However, this company were looking for ways to bring more money into the business. They knew of tax relief because they'd done R&D through Catax for their manufacturing work. And ultimately, as much as they had done their R&D and that was them done and dusted, their little black book was really, really beneficial to us. So they were connected to hotels, B&Bs, nursing homes, schools, you name it. So there was a lot of opportunity for that client to share their network with us in a positive way, to share the value of these initiatives and make some money in the background. So it was just a nice example of a client. So that is me. I'm sure Sarah will share. Let me just get this back up here. So I'm sure Sarah will send over the slides, and if there are questions, definitely happy to take them. But that's me for now. Thank you so much for listening.
Thanks very much. That was really interesting. I'm sure there's many opportunities out there for businesses to claim back those vital funds, and especially nowadays, with the situation we're in just now. So it's certainly good to have the information there to be kind of passing on to other members as well. Okay, we do have a question from John. John, if you want to unmute yourself and come.
Good morning.
Morning.
Can you see the question on the sidebar? It sounds good about the capital allowances. What if a client buys a site with a building on it, demolishes it and rebuilds as an extension to an adjacent site?
Yeah, so that would still qualify. That would essentially be renovation costs.
So
actually, I'm working with a client right now down in London where they've purchased the building, completely demolished it, and actually as they demolished it, they realised there was a lot of contaminants within the ground and the building itself. So, they've then spent quite a reasonable chunk of money renovating this place, and they've now rented it out. So it is it's a building that's bringing in rent, it's trading, it's considered commercial, it's not residential. So yeah, it's worth.
Thank you. So it is retrospective as long as you have an S198. Is that correct?
So obviously, if you have demolished this building, then there's nothing left of this building to claim on originally. So what you would be claiming on is your renovation costs. When you've purchased that building initially and run it to the ground, then it really doesn't matter if you've got the rights or not to claim, because there won't be a building to claim on then.
Okay, so it relates to the new. Okay, thank you. That all helps.
Thanks, John. We don't have any more questions in the chat, to be honest. Alison, I don't know if you've got any questions you want to pop in with.
I don't have anything specific, I don't suppose. I'm going to maybe pick on Andrew a little bit, but Karen and Andrew might not want to talk about his project, but Andrew, I don't know if you want to kind of come on and even just say a little bit about some of the things that you've been doing and whether there's anything that you can kind of contribute to the discussion.
Me, Andrew, absolutely. What we've done is essentially the process that we're looking at the moment is from the work we've done with the two charter companies. We've worked out that we can essentially make that a much easier process if we have a software solution for ourselves. From that, I hired developers, and from that, we have worked out that the industry that we work in, everybody else needs this. And we're at the point where the software that we've then got, as Karen said, I'm tasking her sister to sell, is viable for all aspects of the private aviation industry. And we have invested quite a fair bit of money in this, essentially from the RBS overdraft. And we're looking at the rate of return that Karen told me about at the first session we did back in the old brewery building. That therefore the money that we can get from that will help recoup that investment cost on what we've done. Because of that, it's allowed us to sort of push on and know and actually have the confidence to spend the money, knowing that it falls in the R&D bracket. Which, when I first started this process, it was all bootstrapped. It was all coming out of my own back pocket, and I didn't really have a don't know if I should really admit this. I didn't really have a firm grasp that this was available to be claimed back. So it was a project we went into slightly blind, but now knowing what the tax advantages are, I've got so much more confidence to invest more money in it, knowing that I can put it forward for the R&D claim.
Yeah, absolutely. Claire, my sister's obviously kept me up to date on what this software is doing and the development behind it, etc. So it'll be exciting when the time's right, Andrew, to look into your claim. And I'm pretty sure actually your year end's coming up. So for anyone listening, a wee bit of kind of housework would be you do need to be a limited company for at least 1 year. Also, in order to make this a worthwhile test for you, I would probably say that you're wanting to be spending around, say, £40,000-50,000, and that will be made up of things like staff costs, subcontractor costs, any software you've had to purchase, any materials you've had to buy, and then any ad hoc expenditure like travel expenses that are allocated to the project and things like that. So that's kind of how we make up the bulk. That's how we make up the pot of money. And then from that pot, you want to build it as high as possible so that you can get, a higher percentage of money back from it.
Thanks, Karen. So do you often find that people don't really go into a project thinking, like they haven't kind of got the right kind of lens on, and they're thinking that actually that, this is what they need to kind of keep a track of? So is it often like you come in 2 years after a project's finished, and then you're just trying to make sense of where all the wins are, rather than people going in thinking in the right frame of mind beforehand?
Yeah, no, I know where you're going with that question. So I tend to find that when I speak to companies, either they are all over this, they've known about it for years, they track all their work, they claim every year, and that's that. Or the complete opposite, where they have no idea the incentives exist, they don't really know what they're about. Maybe they've heard once or twice from another person that they don't qualify, so they've not really looked into it anymore, particularly if their accountant's told them they don't qualify, then they sort of take their accountant at their word. So by going in and having the open chat, once they realise that actually this is the R&D work that you've been doing, this is the sort of stuff that you will be doing moving forward, that's where we can advise the client to say, listen, it would be worth your while keeping a note of this activity, because again, it could be that, I'll speak to a company right now and identify that, okay, you have been doing research and development, your costs haven't been there because obviously you've not paid yourself a salary, or maybe you've kind of done a few things in kind to then get service back. So I would advise a client moving forward, it might be worth your time, putting more money through the books to reflect the projects that you're working on, so that next year you can then put a claim in. So it's just about educating the companies, educating the staff within it, and really just helping them understand, listen, as much as you're being modest and you don't think what you're doing is particularly difficult, actually to your industry, it is seen as a challenge, and it is seen as something that's quite risky. So don't dismiss that based on you finding it, an okay task to do. It could actually still count. Brilliant.
Okay. Doesn't look like there's an awful lot more questions, but I don't know if anybody's got any observations or wants to come in and kind of ask Karen anything, then please do so.
Happy to share my details as well, so I'll ask Sarah to pass them round, and connect on LinkedIn. There's plenty of things that I put up, there's plenty of workshops that go on, and if that introducers programme does sound of interest to you, then reach out. It's a chat at the end of the day, nothing more.
I'm sure people are all sitting going, oh, what about that? Oh, and I did that. Oh, and I've done that. And, yeah.
Hopefully, that's the aim.
And at the moment, so this is the time, isn't it, when people have really, in some cases, dramatically changed what they do. And so there really could be some good opportunities for people to look at how they've changed during the crisis, and as we're encouraging people now to be thinking about what does the future look like, what is your business going to do, and lots of us are going to do things very differently. So it's absolutely the right opportunity to kind of be thinking about it. Karen, do you have a checklist? Do you have here are the kind of key things to be ways to think or things to be uncovering?
Yeah, I do. I have a checklist for each of the services, so I can send them over to you to circulate out.
That would be a massive help. Thank you. Okay, great. All right. Well, what we'll do is Sarah will send out details, share Karen's contact details as well with the attendees from the session today. And as all our webinars are, what we'll do is we'll get the recording up on our YouTube channel, and then that will be there, and we'll kind of share that out so that we can get this message out to as many people as we can. But Karen, massive thank you, and please let Stephen know that we really appreciated him joining in and sharing. It's great to kind of hear from somebody that's gone, oh, this didn't feel like it was going to be for us at all, and then, you know, it's made such a massive impact. And the same with Andrew, you know, it's kind of just helping people change their thinking, isn't it? So I'm sure that anybody that wants to kind of have a conversation with you, now's the time, isn't it, when we're all great at we're all getting so good at talking to people electronically now anyway. So I mean, I think that's one thing in the future that we won't go back to is traveling masses of distances just for an hour's conversation, when we can do this and be really productive. So thank you, Karen. Thank you to everybody for joining us today, and thanks to Sarah for getting us all organised. I should just say next week's webinar. So that's one thing I was just going to do is kind of highlight what's coming up next week. So as always, we've got our coffee and a cake on a Tuesday afternoon. You have to bring your own cake, but that's probably better than eating mine. We've also got, so we're doing a webinar series with Catex Management, and so our Tuesday session, Tuesday morning next week, is about, you know, how you're kind of thinking and what you're doing to kind of develop your business thought processes and how business minds are being developed at the moment. So that's Tuesday morning. Then on Tuesday evening, the Chamber is kind of taking over a guide to session. So I mean, lots of people know that we've got news channels and we've got brilliant webinars and we've got ways to introduce you to other members. But what we're going to do is we're actually going to focus on how to promote your business and build connections. So open to members and non-members, is open to anybody and everybody. At the moment, we're working really hard just for any business that needs us. So, you know, if you want to kind of come and get a refresher on how to send us news and to make the most of the big social media reach that we've got, or you want to kind of just remember how to access our business directory and how do you contact other members through us where you actually don't have those one-to-one connections, then please join us next Tuesday evening. And we're going to do that one first before we talk about sleep, just in case I put you to sleep on Tuesday. So Wednesday session, so our Take a Break webinar, which is all about supporting people, that's about getting a good night's sleep. We did a session a few months ago where we were talking about the importance of sleep to your mental well-being, your physical well-being, and actually how you make sure you do a good day at work, and then get that space to kind of make sure you've got a good work-life balance. So Wednesday's all about getting a good night's sleep. And then our business support webinar on Thursday is about culture, communication and currency. So that's about looking at new markets or thinking about the culture and communication differences between you and your customers, and how you can make sure that you're adapting your communications. So that's us for next week. We're really looking forward to catch up with you all. As we always say, you know where we are if you need anything in the meantime. Please have another look at all that business support that's out there if you think maybe you weren't eligible for it in the beginning, because government's mind is definitely turning to recovery and guidance for us coming out of lockdown. So I think, like everybody, will be tuning into what the First Minister's going to say at lunchtime today and learning what happens next. So looking forward to bringing you that news as well and catching up with you all. But thanks very much for your time today. Thanks again, Karen, and I'll catch up with you soon. Thanks, folks.
Thanks all. Bye-bye.